All right, we'll go ahead and get started. Well, welcome and good afternoon, everyone. Before kicking off the talk, I wanted to quickly announce that we have extended the application deadline for our 2026 cohort to January 5th. If you know of any great teams that should apply, please help spread the word. All right, so today's Bench to Market speaker specializes in turning breakthrough ideas into products that can actually be built and scaled. As VP of Advanced Technologies at Generate, Prithvi works closely with startups, spinouts, and industry partners to bridge the tricky gap between early R&D and real-world commercialization. Prithvi has helped develop a wide range of sensor-based technologies, from diagnostics and surgical tools to robotics and automotive systems, and is passionate about guiding founders through uncertainty with clear strategy and strong execution. Please join me in welcoming Prithvi Sundar. And as a reminder, I will be keeping track of questions. I'll ask them as we have appropriate breaks. Otherwise, I will hold them to the end. All right, thank you.
Thank you, Jesse. So I'm going to pull up my screen here. So I debated a lot putting this on the generate template, but there's lots of great partners out there, so I wanted to stay unbiased and just kind of give you my thoughts, not generate's thoughts. Yeah, I appreciate being invited to give this talk and looking forward to kind of sharing some of my thoughts on it. Um, So in my experience, commercialization of new technologies is very thrilling, but it's also very hard. Um, it is often a path that is foggy. And I'm hoping in this talk I can kind of bring some candor to the conversation and not just paint a rosy picture of how the end is filled with a pot of gold. So today we'll discuss how to bridge that gap from academic innovation through the scalable development process, and hopefully achieve success by focusing on sort of three key categories: the technology, the partners, and the development strategy. So first, before we get into it, a quick reality check. Commercialization has always been hard, but the difficulty has recently increased. As most of you are aware, that there's a lot of macro economic headwinds. Capital has contracted. The venture market has retreated from some of the trends of the 2020, 2021 era. As you can see on the graph on the right, that I pulled from more looking at the biotech vertical specifically, venture funding is about half of what it was in 2021. And 2025 looks the same as 24 there. In addition to that, public funding from the government in particular has also become more constricted and much more competitive. As many are aware, the academic space, NIH grants, and those types of things have also become very hard to come by, as well as SBIR grants. And so this is really driving an evolution, in our thinking, and we need to leverage our collective wisdom to be more efficient in this process and think more from a growth at all costs to proving value and proving efficiency to the investors and to our customers and the other stakeholders in the process. All that being said, there is a silver lining. You don't have to do this alone. There are organizations, obviously like Biolocity here, to help with bridging that gap. Folks like myself who support various projects and companies through this process. And also, there's a few new tools. With AI, there's a lot of new ways that we can do things that provide us with more resources or provide us with more tools to do things with less resources than we have before. So a small silver lining, but evolution is absolutely necessary because of the scarcity of capital, making the margin for error much more thin than it ever has been. So a quick couple of cents on who I am. I'm a mechanical and systems engineer by training. I did my undergrad at UC San Diego and then my master's at MIT. And then I started a company right out of grad school called SenseN, where we were building sensors for wheelchairs. And that was really born out of my passion for developing new products that that matter. And uh, After doing that for about a couple years and doing a couple projects, I joined Generate in the interest of getting exposure to a lot more projects. And over the last 8 years, my role has shifted from doing development to managing projects to now overseeing our engineering team here at Generate. And most of the time, at any given time, we're running about 80 different projects of varying sizes, scales, and focus. But I found that consulting has been a really nice fit for me personally, because I'm addicted to making new things, and I have a little bit of a attention span problem there. Over the years, I've helped bring 5 products successfully to market, and also learned just as much from the products that didn't make it. So hopefully, I can share a little bit about from my experiences here at Generate. So first, I wanted to just chat about how the commercialization journey goes. There's a mindset shift that is required to think about to go from an academic setting into an industry setting, and it's a journey. The ideal path to go from A to B is ideally a straight line, but more often than not, it's a winding road um, that has lots of gotchas along the way. And it will be a long journey. And often for the founder, it can be a lonely one. But there are great networks to leverage resources from, and uh, and and pull people along for the journey with you. And another reminder that I always like to give is that the greatest technology doesn't always win in the marketplace. There is often other competitive factors or other factors like competitors and market headwinds, consumer sentiment changes, et cetera, that can make it so that subpar technology wins out in the end of the day, or great technology doesn't make it all the way to the finish line into the consumer's hands. And the other important mindset shift, especially coming from an academic setting, and having been in that position myself, is to shift from, this discovery mindset into thinking about what the end customer wants, what really provides value for them, and really building to that. Often people get stuck in a trap of building what they want, but really in this case, it's important to sort of shift in order to produce the impact that you're seeking to do, to focus on the people who are going to use your product and the other stakeholders throughout that journey. And so in terms of laying the groundwork for that, there's sort of 3 key pillars or 3 key elements of the pyramid, whatever you want to call it, that I like to think of. The technology, obviously, that's the foundation for this entire uh, effort, and it is an important part of it, but it's not the only part of it. And I won't touch too much on technology. You all are innovators, and have gone through that discovery process, and are well attuned to the challenges of developing early stage technologies. So I'll focus more on the team and the strategy here in this talk. Um, and I think of the team as being a really important part of it. Being a basketball fan, and being in the Bay Area here, I'm a big Warriors fan, and um, they have spent close to a decade achieving great success by building around Steph Curry. He's a critical element of their team, and their entire strategy revolves around him. So, that type of focus for the team and strength really helps amplify the technology. And then the last part of it is the strategy, and that's the orchestration of how do you navigate the process to get this product to market. Um, and in order to um, in order to be successful, you need all of these elements. And in this order is how I would recommend thinking about it in terms of priorities. More often than not, technical problems are solvable, but the people problems can kill companies. And so, the first part here, I'll talk a little bit more about the people and the partners. So what is a partner? Partners are a critical element of your team. They can bring experience, they can bring speed, they can bring flexibility. And in most cases, for first of a kind builds, the specs are going to change. What you start with on day one is not what you're going to have a year out from there. So you need a partner. You don't need somebody that you just give them instructions and they go execute those instructions. You really want somebody that pushes back on your vision, pushes back um, on the trajectory that you're going down, and really ask questions and is earnestly seeking to have your best interests at heart, and looking for shared success. Ultimately, they should believe that your success is also their success. And the other element here, in terms of partners, is especially for early stage companies, hiring is a big risk. It can make or break a nascent organization. Um, there are many, many horror stories that I can give you, and I'm sure lots of other folks can give you, where they made a hire and it didn't pan out. And in most cases, you don't need to hire for every discipline. It doesn't always make sense for an early stage company to have a quality manager, to have to have all those other auxiliary elements. So look for ways to make the key hires and then use partners to increase your breadth where maybe you need some additional eyes or additional hands, and then build some depth where your team maybe needs some help. And you can use partners to augment that process. So in terms of the types of partners, there is really an ecosystem here, and it's important to build up an ecosystem, especially in the biotech world. Building a company building a product is a team of teams problem. Um, there are investors who provide capital, the guidance, the connections, development partners who provide engineering support, chemistry support, software support, manufacturers that help you actually produce the products at high quality, and then early customers who, I phrase as a partner here because they're ones who are dying to get your technology in their hands, and they're willing to put up with some of the early stage kinks in the system, and also willing to pay for it because they're able to get either some data or get some use case out of it that they couldn't get any other way. So developing a partnership and developing a relationship with them is critical. Um, and being the innovator, you kind of sit in the middle of that entire ecosystem, and your job is really to align all of their interests and align all of their motivations, so that you can be successful in navigating. Misalignment in any one of these partners can silently destroy your momentum, and before you know it, it will be gone. Um, and as an example, customers, they care about reliability and not just the novelty of the new product. And investors want returns and impact. Development partners often want to build new things. So it's important to keep in mind their motivations, try to get to the root of those and start to align them and find synergies between all of those different players. In terms of choosing a partner, very often I get asked these types of questions. Um, One of the most important things is to find the right fit and communication style that works for you. There are a lot of great partners out there, and not everybody um, will work well with every partner. So it's very important to find the right fit for you because you're going to be embarking on a multi-year journey here. Most development projects, in my experience, have been on the order of 1 to 3 years. So keep that in mind that you're building something for the long term. And as you go through the process and comparing different partners, you'll want to look at their technical approach, their creativity, their communication, what kind of chemistry you're able to have with them. Um, it's easy to fall into the trap of, people showing you lots of examples of things they've done in the past, but first of a kind work doesn't map neatly into past examples. The case studies are not predictive of novel development. So it's really important to talk to the people who are going to do the development. Um, and and very often it's useful to embark on an exploratory phase. Treat it like an audition. Give 2 to 3 partners an identical brief. Pay them if you have to get the best work out of it. 5 to 10K early in a process to vet out the right partner um, for a multi-year journey where you're going to spend millions, maybe, is a well worth investment in the relationship. And if you can quickly identify maybe where you don't fit well with somebody or where you do fit well with somebody, is it's going to really help set you up for success. And I see a lot of times that uh, people want to penny pinch. And it's tempting to go with the lowest bidder, especially when capital is constrained. Um, but it's always important to ask why they're the lowest bidder, and understand that. And very often you can just ask them that. It's often the case that maybe they missed some element of the project that either wasn't communicated appropriately, or um, maybe they do know something that somebody else doesn't. So I put together here a couple of key questions that you might ask as you kind of approach a vendor that maybe seem taboo, but are well worth it as far as making sure that you can find the right fit for you. One of the best ones I would recommend doing is talking to one of their past or current customers, and seeing why they chose to work with them. So just the quick takeaways are, look for long-term alignment. Most partners, they want to build something new. They want to build long-term relationships, um, and they want the revenue that comes with that long-term relationship. Um, be aware of their ability to weather the early stage ambiguity. Most first-of-a-kind projects don't have a clear recipe, and make sure they're willing to co-create with you. They're not just waiting for you to provide orders for them to execute. That's just going to make more work for you. So as you prepare to approach a partner, here's what I would recommend as far as things to bring and things to avoid. Um, you're going to want to have a key requirements document. This doesn't need to be a spreadsheet in a really nicely formatted, hundreds of lines, but keep it small, keep it measurable. Over time, it will iterate, it will grow. These are going to be the most important requirements that if you don't achieve them, you don't have a product, right? And it shouldn't be more than 5 to 10 items. And the next item I would recommend is putting together a risk or a gap analysis. There are unknowns, especially as you embark in the journey, and what you perceive to be those unknowns might be different than what your partner might perceive to be the unknowns. So putting together your own list and kind of having that in the back of your mind is going to be important for when you go through the conversations with a partner, where you can see if they're echoing back some of those risks, or if they don't think they're risks. And you can even ask that, do you believe this is a risk? And they may be thermal or optical or biological or consumable. And most partners who've done this for a long time have other relationships with other partners in adjacent fields. So they may be able to make a recommendation on how you might achieve a risk mitigation, even if they can't do it themselves. So it's important to put together a straw man of your launch plans and your critical milestones. Even if it's going to change, having a straw man helps communicate to your partner that you have an idea of where the ship is going to go, and you have some ideas of where you think there might be some inflection points. And putting together these 3 things really helps you be put together for a partner. It will make it seem like somebody who is prepared, and they will want to work with you as a result of that. And it really sets the stage for a good partnership. Um, and a couple of things, I've heard over the years, just in doing this work, that are red flags for me, are everything's done. Don't worry about it. We just need more units. We need just a little bit more engineering, just a little bit more. And I think people say that because they believe it will reduce the cost of the program. But if anything, it makes me more suspicious that there's something that is being glossed over, or there's a risk that's hiding somewhere that people haven't quite addressed yet. And so to that end, withholding technical information or risks or even financial concerns for that matter are definitely things you want to avoid. A good partner will understand that the current state of the market and be willing to work with you if there are financial concerns. They can create payment plans, they can create ways to go slow so that you can go fast later, or they may advise on other places you might seek support. And the other thing I often hear are these rosy long-term pitches. Don't take your investor pitch and give it to your partner. That is, uh, a recipe for them to become disinterested. Um, we hear all the time how in 3 to 5 years, this new technology is going to change the world. It's going to absolutely revolutionize the healthcare industry. It's absolutely going to revolutionize, this or that. Um, they've all heard it before. you know, 3 to 5 year picture is great and it's important to have, and it's probably what drives you. Um, but for a partner, they want to be practical. They're here to run a business. They're here to do a job. So give them some information about what the next 12 to 18 months are going to look like, very specifically. As an example of a recent experience I had just a couple weeks ago. I had a team of three come into our office here, and they started by telling me how there's a significant unmet need in this space, and um, how in 2 to 3 years they're going to be dominating this market, and et cetera, et cetera. And then he proceeded to take a time out in like 30 minutes into the meeting and then start buying World Cup tickets. So, be professional. These folks have a job. Their time is valuable. If they're not spending their time with you, they could be spending it elsewhere. So it's important to respect that and really set the foundation for a good partnership in that way. So leading into, how to work with partners effectively, once you have chosen one, it's important to understand their motivations. As I may have mentioned a little bit before, they look to work with good people. They know that strong collaboration yields good products, and they want to build meaningful products. Nobody wants to work on something that sits on the shelves and never makes it out into the real world. So they want to see impact as well. Um, and recurring long-term revenue is, from a business perspective, what they seek, not um, short bursts of revenue. Um, they want to see long-term sustained success. So to that end, um, I would suggest radical transparency. Reveal risks early. Create a two-way flow of information. If there are critical demos that are coming up, let them know. If you have an investor meeting coming up, let them know. They can often find ways to help them. We had a recent situation where um, one of our one of our customers was um, putting together a deck for an investor meeting, and they just happened to mention that they were going to show kind of where the design was at the stage, and it was basically just a bunch of CAD blocks. And we're like, no, don't show that to them. That is not going to inspire confidence for your investors. And we spent, maybe another hour or two, and had one of our industrial designers put together a sketch of what the end system would look like, so that they could put something in front of the investor that helps convey the real message and the story behind what it is they're doing, not just we have done some CAD. So, there by creating this two-way flow of information, there are often some latent needs and some latent um, content that you can create that will help kind of push the journey along. And if you have concerns, be open about them. Early pivots are much, much easier than rework later on. I always tell customers I'm happy to take a call at 9 p.m. on a Tuesday, then wait 3 weeks and then have to go back and either do a bunch of rework on an engineering project and kind of break that trust. So it's important to create an open communication channel with them. And then in addition to that, you want to create some good decision-making frameworks up front and be clear with your team as well as with your partner's team. Make sure when you approach these critical decision points that you have alignment internally. Um, there are definitely situations where, we're sitting in a customer meeting and we can tell that two or three of their team members are not aligned and they're saying different things. And you don't want to put your partner in that position, one, because you're paying for their time. It's going to cost you more money. But also, you don't want to leave it up to the partner to um, decide who they should listen to. You should be clear on who you want them to listen to. So it's important to kind of establish those decision-making frameworks and communicate that to the partner up front. So a couple of best practices on this front is, yeah, establish some single decision makers on both sides. Set up some regular meetings. You'll have team meetings that maybe have 5 or 10 people that are more informational to indicate where progress has been. But it's important to have smaller meetings with the key stakeholders, the key decision makers, where they can talk about, any issues with the team, any issues with funding, any technical issues that they feel uncomfortable about, and use those meetings to then pivot. And I would recommend, especially for a multi-year project, to do that on a weekly basis. Even if it's a 30-minute check-in and there's nothing to talk about, it's still a useful time to just block on your calendar and have that space available. And then finally, defining some clear criteria as you kind of go through the different phases of development of what you would like to see achieved um, to achieve to make sure there's progress on the project. So a couple of red flags that I just wanted to put out there, and these are sayings or phrases that partners will sometimes put out there um, that are red flags. Ultimately, you want to find somebody that you can trust and you can build a working relationship and then have an open dialogue about the good and the bad. And so these are phrases um, that are indicative of the opposite. One that I hear often is we have a process for that, for ensuring success, um, especially in a development company. Um, as much as people might tell you that they have a magical process where they can plug in some requirements on one side and get a product out the other side, that is misleading. People ensure the success. You need to find critical stakeholders within your partner that are going to be the champions for you. Um, the other one I hear often is here's exactly what it's going to cost you for the next 3 years. I mean, all project plans, especially in the early stages, are dynamic. And the dynamic nature of that will result in change, which will result in cost changes. They should be able to provide you with a ballpark, um, and that ballpark is purely indicative of where the requirements are today. And it should be something that you continue to ask for to be updated as you go through the various stages. And another one that I hear often is we've designed that before, we've made that before. Most novel devices have some new element to them, and if not, you should just go find an off-the-shelf version and start selling that. Don't save yourself a couple $1 million, save your investors a couple $1 million, um, just and don't put in that effort. So identify the things that are novel, and identify ways that they would approach solving that problem. They may have some similarities in projects they've done in the past, but if they've done exactly what you've done, I think that's a big red flag. And then the last one is around risk. Um, all programs have risks, no matter how small they are. Um, it's important to identify them as risks so that you can keep them on the table and make sure that it's getting the appropriate amount um, of eyeballs to de-risk it. as you progress through the project and you're carrying risk, that creates more and more opportunity for things to go wrong further down the line. So you'll really want to make sure those risks are getting mitigated early on in the process. So that brings me to the next stage, which is the strategy. And how do you set that up for success? So I wanted to start out here with our development philosophy. And this is one I strongly believe in, having seen it be successfully employed on many, many projects. Um, and the key of this really is to identify risks quickly, identify and prioritize them, and work to reduce them through some experimentation. You don't need to build a full project to retire risk on one small subsystem. So an important element of this is to make sure that you can create some iteration loops where you're really getting market feedback. Waiting to pilot in order to get a unit into a key customer's hands is often can be detrimental. You might build the wrong thing. So it's important to identify a minimum set of viable requirements that will help get value to your end customers and be very disciplined about that. Control that obsessively. Um, there will be lots of people that want to add in features or provide input on how if you did one extra thing, it might be just a little bit better. But really focus on the minimum viable requirements. And I can't emphasize how important that is. Adding requirements adds cost, and it's a recipe for derailing your program. And as you collect those requirements, you're going to go through these loops of breadboarding and alpha and beta, and very often there's usually 1 to 2 more minor iterations where you're going to solve some key issues before you can get it into your customers' hands. And most early customers are going to be okay with a couple of kinks in the system, because again, they're ones who will be willing to put up with those kinks because they can get data or they can get some value out of the system that they wouldn't be able to get any other way. So, in terms of what is an alpha, usually what we persuade customers to do is have it be the first incarnation of the device where all the major functionality is included. This is where you're seeing a lot of the component level risk at the integration level be reduced. And at this stage, you want to really leverage as much off-the-shelf components as possible. Don't worry too much about the cost of that system at this stage. It's really meant to just show what happens when you put it all together. Can you create something that will produce end value for your customers? As you then learn from that, it's really an engineering exercise to learn from that and then iterate that into a beta system. The beta systems will typically be um, much more usability focused, have some aesthetic elements to it, and be much more form factor compliant. So, and then usually there's 1 to 2 more iterations where through some market feedback, you've identified that this one requirement needs to be a little bit tighter, or it needs to shift a little higher or a little bit lower. So those leave room and expect that there might be 1 or 2 more iterations to get you finally to a commercial launch. So all along the way, you want to make sure that every dollar you spend is reducing risk and increasing your technology maturity as it gets out into the market there. And being in the world of biotech, quality and regulatory are very important topics. Just as a disclaimer, you need to follow FDA regulations and guidelines to achieve a compliant process and a compliant product. So where you have questions on those, seek expert guidance and incorporate that guidance into your process. Quality and regulatory compliance can be very, very costly. Often, in my experience, typical medical projects are 2 to 5 times the cost of a research use platform. And that's due to the cost of doing the documentation, the testing, the regulatory submissions, having a quality management system. Um, and there are ways that you can reduce that or mitigate that cost, especially early on in the project where you're really looking for market validation. Um, so I would recommend keeping your requirements set small, and keep it focused early on so that you can make sure that you're focusing on the right things. Um, Keep regular design reviews so that you can track the evolution. Just because you're not doing a fully compliant FDA regulated um, process in the early stages doesn't mean you shouldn't have good design practices where you're conducting design reviews, gathering feedback from multiple stakeholders with different expertise, so that you can have a repository of how your design has evolved in the case that you need to go back to a design or you need to identify where things may have shifted in a design and kind of track that evolution. Um, and then once you've achieved some level of market validation, and this is a little fuzzy topic, but this comes down to having an open dialogue with your early customers, as well as with your investors and your development partners. Once you've gotten confidence that you're building the right device, which is typically after an alpha, sometime between an alpha and a beta, um, you can start putting some design controls in place in earnest. Um, and more often than not, you don't need to reinvent those design controls. There are lots of resources out there that you can use as templates and leverage those templates to create the right set of design controls for your product. You know, a class one versus a class two versus a class three medical device have very different needs and requirements, and so uh, don't do it too early and make sure you've gotten some market validation before you start putting those controls in place. And in terms of things to focus on early and things that you might consider deferring to later, um, I came up with kind of two lists here. On the left-hand side are the early focus items. As we've talked about a couple times before, high risk requirements and subsystems. This is absolutely critical, especially in the early days, because they will drive how you make your architectural decisions. And architecture can be a vague topic, but it's basically how are you going to achieve the key requirements? For example, we make systems that have um, PCR PCR subsystems, and they have ramp rates that are certain temperature ramp rates. So how are you going to achieve that? Are you going to use a thermoelectric cooler? Are you going to be using a cartridge heater? Are you going to use some other technology to do that? And those architectural decisions in the early days should be driven by the high risk requirements, so that you don't paint yourself into a corner on your critical components. Those critical components are going to be things that you will want to maintain throughout the entire process here, and make sure that you've uh, you've sort of set those and identified good sources for them, where you can ensure quality along the way. We developed a system for a flow cytometer for a customer, where they had a very critical beam deflector within there. And there was really only three vendors on the market that could produce that. And we spent the first 6 months of the program just making sure that this vendor could produce that in a repeatable way with repeatable performance, so that we could build that into the system. Without that component, without that source, their product would just not exist. So very often there are 1 to 5 critical components within a system. Identifying those, making sure they're tied to your key requirements, are absolutely critical. And developing a partnership with those sources for the vendors for these is also critical so that they understand the impact of what their parts are doing for you. Um, and along the way, you'll want to build de-risking prototypes. And I say prototypes here because it's tempting to build the full system and use that as a way to de-risk the system, but it's much more useful to build small prototypes that are focused on answering some specific questions, um, and breaking down the problem in that way in the early stages. It helps from a cost perspective, but it also helps from speeding up the learning loops. And often with these prototypes, you can even put them in front of end customers to get some feedback, whether it's the data you collect through that prototype or it's helping understand what the workflow is going to look like with an early customer by showing them the early prototypes and how it might function within their workflow to get them the data that they can't get any other way. Things that you would defer are going to be cosmetics, industrial design refinement. Um, Spending a lot of time on what it looks like before it even works is a big no-no. It can lead to a lot of sunk cost without a lot of market traction, that will quickly burn money up. UI polish is another element of that. User experience, user interface. They're important, but they can come later. Customization of mechanisms. Um, and by this, I mean early stage, you're going to want to use off-the-shelf components wherever possible. Customizing the mechanism is sometimes a route that engineers push themselves down because they can do it. But just because you can do it doesn't mean you should do it, especially in the early stages. Those the things that drive customization are often cost or packaging, size packaging, or something else along those lines. And those topics are really only useful to consider at the beta or pilot stage. And then size, form factor. Does this fit? Is it too big? Basically, it's much easier to go from something that works and then identify ways to reduce it than to start with something very small, realize it doesn't work, and then have to grow it. So give yourself room to work in the early stages. You're going to build 1 to 3 prototypes. Those 1 to 3 prototypes, you're going to be taken apart and put back together and taken apart and put back together multiple times. And the more space you leave in that system, the easier it will be for you to navigate, and do maintenance on it, upgrade the system, etc. And then cost optimization. This goes hand in hand with the customization element. Um, Very often we see folks get caught up on the price of an alpha, um, which will be more expensive. Um, don't get too stuck in that trap. You can do certain exercises, such as a straw man bomb for a production unit, which will be a swag, but it will give you a better understanding of the cost rather than just understanding what the alpha costed you and thinking that that's going to be what you're going to have to build your business around. So unit cost optimization too early can be detrimental and can be misleading in how you pursue the development process. And then regulatory body certifications. So these are things like UL or TUV or um, uh, other bodies that perform certifications. Those very often can come much later. Early customers, if they're truly in a partnership with you, will probably be okay with not having some of those certifications before they start using your product. Obviously, within different environments, like medical environments, you need to pass a certain bar for safety. And there are ways to do that. So this isn't to say you should ignore regulatory bodies, but there are certain certifications that you can defer. But obviously, you want to make things safe. You don't want to produce any harm in patients or in end customers. So do your due diligence on that side of things, but don't go too far down the regulatory body certification approach. And the last thing I'll throw in here is an optional one. Um, and it's optional because it really depends on your journey and how important it is, either for fundraising or for helping communicate with your end customers, is a looks like or works like model. Um, it's often useful, especially if you're building, for example, a Clio Wave device, to build a works-like model. So you can put it in front of people, they can interact with it, you can get feedback on how they're interacting with it, and use that feedback to carry into your development. Um, looks like models are often useful for fundraising. Investors sometimes find it difficult to see the vision that you have. So putting together something physical or something on paper even um, can be useful in kind of uh, indicating that story of how you're going to really transform this industry. Um, so with that being said, just touching on a couple of pitfalls that I've seen over the years. Um, and we've touched on a couple of these already, but just reiterating here, building for perfection before validation. Waiting too far into the process, your third or fourth iteration before you even put it in a customer's hands, or show it to a customer is can be detrimental. Because you will have sunk a lot of time, a lot of money into getting through those iterations, and they may not even want it, or they might find a different piece of that technology more useful. So getting uh, prototypes in the hands of your customers early on will help you identify what are the key requirements and what are the nice to have requirements, and creating an iteration loop there as tightly as you can really helps get you to build the right thing. Cost optimization too early. Early alphas and betas and pilot units are going to be more expensive than your commercial units. Even the first pilot units that roll off the line, even if they're in a production environment, are going to be more expensive just by the nature of it. It's the first time that you're building it. It's going to take more hands-on touch time. It's going to use maybe not as scalable processes like machined skins, for example. And you should seek market validation, get these into people's hands, support them as much as you can to make sure they're getting the value out of these units, that you're collecting the feedback out of those, and then you can look to identify areas where you might reduce cost. One of the most important examples of this is investing in tooling too early. Um, Injection mold tooling can be hundreds of thousands to millions, depending on the size and scale of what you're doing. And that's a lot of capital to sink in before you even get to market validation. And there are lots of other ways that, on a part by part basis are a little more expensive, but leave a lot of flexibility in the development process and in the product so that you can iterate based on market validation. And the last thing I would say is waiting too far into the design process before you start collecting documentation. And that's not to say that you need to have, every single document or every single part documented in the process, but you want to have at least enough information that you know what you built. You want to know what was built in the alphas. You want to know what was built in the betas. You want to know what the differences between those things were, what the performance was, so that you can kind of track the progress of the system. So it's important to create repositories for that, and there are plenty of AI tools now where you can take meeting notes, you can summarize design documents, you can create presentations. So um, the excuse not to do this is becoming lower and lower. So I would highly recommend making sure that you're doing this all along the way and build a habit of it within the team and your partners. And finally, in terms of key takeaways, find some partners to work with you. Um, they can be force multipliers if you build the appropriate amount of trust, um, and you work closely with them. Focus on building prototypes, seek early feedback, refine your requirements, build that iteration loop, and then finally be flexible and ready to pivot. All new product development is risky. You're going to encounter issues. You're going to encounter problems. Make sure you're ready to pivot when you encounter those things. And with that, I put in my LinkedIn here for anybody who wants to chat further. Happy to connect, help in any way I can. And feel free to drop me a note and let me know if you have any suggestions or thoughts on the talk.
Amazing. Thank you. A couple of questions. How can founders make the most of limited funding when engaging partners?
Good question. I would ask most partners will provide you with a early quote, and in that quote, they can give you a sense of what the overall picture looks like in terms of where they will spend money to get you to certain milestones. Um, you can use that plan and compare it against a couple of different vendors. Um, and it's not about negotiating to the lowest cost, but trying to find the most value um, in the right milestones. So ultimately, it's about finding the right milestones that will produce the most value for you. And you're the most well attuned to what your technology needs and what your customers need. So finding finding milestones that are appropriate by talking to your network, by talking to your partners, and then investing in those is important.
Amazing. Next, we have a question from Todd. It says, I have used Generate as part of my company's development. Great partner. What are examples of design controls that you see get implemented too late?
Interesting. Yeah. Well, good to hear that there's a familiar face. In terms of controls that get implemented too late, um, one of the one of the easiest ones I would say that get implemented too late are in creating some kind of acceptance test. Um, and that acceptance test typically is identifying your key requirements and putting the unit through the paces. Very often people get excited about, we have this device now and it sort of seems to work, so just ship it. But I would say, taking a timeout at that stage is really important, and creating some kind of checkout list to say, if it meets these five things, we know it's working, and we can ship it then. And so creating kind of a repository that helps create a dialogue with your partner, so that there isn't finger pointing at the end of the day once they do ship it and you say it doesn't work, but they say it does work. So aligning on that early on is really, really critical.
Great. Other question. What does that early R&D to commercialization gap typically look like, and how can teams avoid getting stuck there?
I think the most important part when you do feel stuck, which feeling stuck is natural. I guess let me just say that first. Feeling stuck is natural. Um, the things that you want to focus on are collecting feedback. You know, talk to a lot of people, talk to your investors, talk to your partners, talk to your customers. Um, Often I find that talking to those people and putting out that situation where you feel stuck, they can provide perspectives that help illuminate maybe your next step. And one of the benefits of being within a small company and an early stage product development is you can experiment a lot, without very much, um, without having to convince a lot of different people. And so create small iteration loops, small experiments. Um, be clear about what you want to achieve with that experiment. Are you trying to answer, is the requirement 15 degrees Celsius or is it 25 degrees Celsius? Create some experiments around that. Um, and structure it and run an experiment to answer that question.
Great. Thank you. Those are all the questions that we have, unless anyone has any
Awesome.
last minute ones. I know we're getting to the top of the hour. Um, Otherwise, thank you so much for your time today. Really interesting topic. Enjoyed listening in, and thank you so much. I hope everyone has a great day.
Thank you.